Hey, incubator students, how you doing? Today is, it's technically Thursday, but this lesson is for Friday, March 20th. So this is one of a two-part video series that you're going to be getting on this one. So this is part one. There'll be a second video. Everything you need to know for this lesson today and assignment will be included in the email because PowerSchool is not being awesome right now. All right, so let's get through this. We need to talk about how we are structuring our business and how the law impacts that. So let's do that. So what we need to talk about a little bit is the laws that govern our business and how it protects our business operation from hiring and firing to the creation of the business to the dilution of the business. Dilution means to shut it down. Any liabilities or debt that we may incur, as well as profits, how it impacts family, what happens if one of us gets in trouble, all those sort of things, right? So the old saying goes, a good fence, something about a good fence and good neighbors. Good fences make good neighbors. Yeah, that's it. Good fences make good neighbors. Really what that means is that, hey, if you and your partners are going into business, well, you better have some good rules and some guidelines that help with that. Because if you ever get in a fight, like think about it. Have you ever gotten in a fight with your best friend? Like you were the best friends and now like, oh, this person is the worst. That's difficult. Now, multiply that times having a business with that person. It gets really messy. So luckily I've been down this road a couple times and I've ran with my business structures. I'm going to show you some examples of what I've done as well here. So let's go through that. So there's all sorts of different things that could be affected here. So we could talk about with the risk that our business may involve, it might involve like a loss. So what happens if our company is, like right now, with the COVID-19 virus, restaurants and such are shutting down right now. Mercury Marine is even going to be shutting down for a while, so I heard today. That's loss of revenue. As a business owner, let's say that you own a restaurant, how do you and your partners manage that and that loss? Who's liable for the loss? Who pays up and who doesn't? All those sort of things. What if there's a fire? What if you get sued? What if there's a dispute with a fellow owner? With all these, you don't have to assume that it's an if, you assume that it's a when. You assume that these things are going to happen because they probably will. Good things, bad things happen to everybody, right? Bad things happen to everybody. So it's just a matter of time. When are you going to, how are you going to impact that? So the structure that we set up for our business and our operating agreement helps define all this and how that all works. So there's 5 different ways that we can run a business. Okay, there's 5 different ways that we can organize our business legally as a structure, and this is how we get recognized by the state of Wisconsin through the Wisconsin Department of Financial Institutions, as well as the national government and the Internal Revenue Service, IRS, i.e., Uncle Sam wants your taxes. Okay, so we could organize this as a sole proprietor, a partnership, a corporation, an LLP, which is limited liability partnership, or a limited liability corporation, LLC. Okay, you will all likely be going down the road of an LLP or an LLC. Let's briefly go through all of them real quickly just so we're all in the clear. All right, sole proprietorship, super easy. A sole proprietorship is you run your own business, you're doing it by yourself, you have no partners, it's all you, okay? There is zero cost to form and zero formalities. It's super easy to set up your business. You could start running, making candles out of your house, right? You sell those candles at craft fairs. That's technically a sole proprietor. And you could run that through your personal taxes, although I wouldn't recommend it. And it's really simple to run and operate, okay? As you grow, though, and as the business takes on employees and partners and such, that may evolve into something different. The downside is that we have what's called unlimited personal liability. So what does that mean? Unlimited personal liability means that what happens if you're a company that's making, candles again, right? And you get hurt while making those, or one of your customers decides to sue you because they claim that your candles exploded or did something silly and burned down their house, and they're going to sue you for everything. They can take your car, your house, your personal money, all that stuff. It's not limited to your business. What is your business is also your personal. There is no separation of business and personal in a sole proprietorship. So sole proprietorships are a little dangerous that way. So it's something to consider. All right, that's sole proprietorship. Partnership, exact same thing, but now you've got two or more partners. Okay, all right. So if we look at Ian and Isaac, right, are sole proprietors with their company. They can be very easy to form again. You still have unlimited personal liability, so if something goes wrong, they can come after you personally and sue you personally and take all of your house and your assets and everything else above and beyond the value of your business. This can be done on a handshake. Don't do it. It's a really bad idea. Or an agreement, okay? A partnership agreement is a really good idea. Like, you have to do it. You'd be dumb if you don't. The partnership agreement, which we'll go through some examples in the next video, basically say, here's how we set up our business. Here's who's in charge of what. I brought in $500. You brought in this equipment. It's valued at this. If we decide to break up and go down the road and say not work together anymore, here's how that'll happen. All the if-thens, all the worst-case scenarios are spelled out in that agreement, which I would advise you work with a lawyer to develop. And then those are signed, which can then be utilized. So, don't assume that you're going to sue your partner, or don't think, man, I hope this doesn't happen. Assume that it is going to happen. Okay. Again, plan for the worst, hope for the best. And then the judge will look at it and say, hey, you're suing your business partner because they took your money or they burned your place down or whatever, the kid didn't work. The agreement clearly says this, boom, answer's done. So have an agreement. As a partnership, you have a fiduciary duty. That's an important term. A fiduciary duty means that one partner can act on behalf of the other financially. So let's say there's two of you running a business. One of you decides to go out and buy $10,000 worth of equipment for the company and said, hey, this is a good idea, let's do it. And the other person doesn't have to agree to it. It just happens. They may not like it. They may get in a fight over it. But the fiduciary duty means that one can act on the others financially. This is where it gets sticky, okay? So you may end up fighting about this. Money usually causes the biggest issues, and then it gets worse. Now, family businesses are even worse. So if you're like, say, I'm going to go into business with my uncle or whatever the case may be, or my brother or something, multiply that times family feuds. You know how much your brother and sister fight. Put money in between with a full business, it gets sticky. Some family businesses work really well. Others are difficult. So there's that. A corporation. Corporations are really weird. So you think about corporations be like Nabisco, Pepsi, Home Depot, Tesla. These are all corporations. Okay, they are not a human. They are a business. The business is thought of as by a human. It is its own identity. It's its own living, breathing thing. Okay, there's tons of formalities, tons of tax issues, but you have what's called limited personal liability. So if you are the CEO of your company that you started, but now it's a corporation, and your business goes bankrupt, you can only lose as much money as the business is invested in. They cannot come after you personally, unless you did something shady and not so good, in which case then you might get trouble differently. But it's a little safer. Okay. So that's a corporation. Corporations will live on longer than their owner. So like if you think about Steve Jobs from Apple, he was fired from his own company by the shareholders and by the board of directors. He started the company. He got fired from his own company. Apple continued on without him. They eventually brought him back on as the executive again. Then he died. Now somebody else is running it, right? I think Tim Cook. The company, Apple, still kept existing without that original owner. So it becomes its own life and living, breathing company as a thing. A corporation is owned by the shareholders and the investors, not an individual person. So if you buy shares of Apple on the stock market, which are tanking right now, not Apple isn't, but the stock market is. Those people who own shares own value in that company. They are the owners of that company, and they have the right to receive any profits, share in any losses. but they have no duty to contribute more to the company if it has additional loss. So if Apple has a bad year, they're not going to come to the shareholders and say, hey, can you give me some more money? They're like, no, you screwed up with what I had. So there's that. Under a corporation, you need to have what's called an Articles of Incorporation. Okay, that is basically the legal framework that defines how the company is built. The bylaws are the rules to which they live by, in which they manage themselves. They will have what's called a board of directors, probably somewhere between 5 and 15 people. That board of directors is the council's people that basically say, yep, this is where we want the company to go. No, we don't want to go. Here's our new CEO. All those sort of really, really big picture things, right? If you think about our school, Mr. Sadoff reports to our Board of Education. The Board of Education really defines those big picture things from a district. But when it comes down to it, Mr. Sadoff runs the company as the superintendent or the school. So same kind of thing, exactly the same, only different. And then there are officers within the board of directors that will help work within on a committee level and such. So there's a much bigger hierarchy of who reports to whom within a corporation. They also will pay taxes twice. Sole proprietorships, partnerships will all pay taxes once on their income. Corporations get paid twice because the company will get taxed, and then profits get sent down to the shareholders, who are technically owners. Any income that they receive off of that company is also taxable. So that's why they call corporations being referred to under double taxation. So there's that. Got to pay for stuff. That part we can skip. Yep, that part we can skip. All right, and then there is the last two, which what we call limited liability partnerships and corporations. This is where I think you guys should live, okay? A limited liability partnership is just like a partnership, right? 2 people are starting a business, 3 people are starting a business. We're going to have these terms of agreement, that sort of thing. But the caveat is that they have no unlimited liability, okay? Let me repeat that. They have no unlimited liability, which means that if the business fails, goes bankrupt, somebody gets hurt, they're sued, whatever the case may be, they can only get sued based on the initial value of that company. Okay, so if the company is worth $20,000, somebody can't come in and say, I'm going to sue you for $1 million and take it all, because there's only $20,000. They can't go after you as a human, individually, as a person, and say, well, I'm going to take your house and your car and your firstborn and everything else. So they have to think about that. Any of my businesses that I've ever worked under and started, all limited liability corporations or partnerships, either an LLC or an LLP. Highly advisable on how you do that. We will walk you through that in the video part 2. Okay. And then, of course, the last one, which some of you we've had in the past, are nonprofits. So charities. The United Way is a charity. It's a nonprofit. Goodwill is a charity, a nonprofit. The YMCA is a nonprofit. They still make profit. They still make a lot of money. But they don't pay taxes, and there are very strict regulations about how they use those monies, all sorts of other things. So one of our teams for Incubator last year was a nonprofit, and they made chocolates for charity, and still operated, still made money. That just had to make sure that a certain portion of all their business actually was used for charitable purposes. None of our teams are using charities this year, so we can fly by that. Okay, so that's part 1. Tune in a little bit for part 2, and I'll share that with you as well, and then we will get into our assignment.